Hello everyone, welcome back. If anyone can hear me, please reply by chat. Okay, thank you very much. Today, I will start with some questions that I got especially during the day today. We'll start today first. Got a question today. How do I add time and expenses that we forgot to bill on an existing invoice? Let's say you have a bill for expenses, or you have time paid to the employee, and it's for a specific customer. Of course, the customer has to be mentioned on the bill or the timesheet, and it has to be marked as billable. Otherwise, they won't show up. Now, if you have an existing invoice, it's a little different than creating a brand new invoice. When you create a brand new invoice, as soon as you enter the customer that you had on the bill or the check, then it will remind you automatically. It will remind you to add the outstanding billable time and cost. When you have an existing invoice for a customer and you just want to add the billable time and cost, click on the Add Time and Cost button on the bottom of the invoice, more towards the right side. Based on the customer you entered, the time and cost unbilled will show up in one of the 4 tabs. Next question was, let me just read the question in the chat. They ran a PL summary for last fiscal year, and also profit and loss detail report for the same period. Someone ran a report last fiscal year and also a profit and loss detail report. An invoice entered near the end of the fiscal year appears as an income item on a detail, but was omitted from the summary version. I will double check to make sure both reports are on the same report basis. Both are either accrual basis or cash basis. It's almost impossible that you see it on the detailed report or one of the income that you should not see it on the summary. Another question, how do you redeposit a bounce check? To redeposit a bounce check, you will have to go into Receive Payment, Yesterday we went through how to write out a check from the bank to record the bounced check. Assuming you do it either through an invoice or going back to the previous question, yes, this is the answer. If one was cash basis and another one was accrual basis, then basically if the invoice is not paid, you won't see it on a cash basis. Coming back to the bounce check question. Let's say, for example, you enter a bounce check that we went through yesterday. So now you go into your customer center, you look up the customer. You look up the customer and you see the bounce check on the customer side. So let's say this is the bounce check. Now, when you run an open balance report, it will show up on their statement. The next step is, if you're planning to redeposit the check, go into receive payment and fill out just the exact amount of the redeposited check. And you will notice, if you enter it as a check, you will see right away, based on the number, you will see right away which one is the check. Check off the amount, and this way it will be considered a new payment. Payment method is check. Check number will be the exact same check that bounced. Memo, I would write redeposit it. Save and close, and do record deposit. Now this check is going into the undeposited funds. You go into record deposit, and you proceed from there. You select the payment. If it's together with other deposits, you can always bring back the previous screen by clicking on the payment button. This green icon brings back all the payments from undeposited funds. And then you click Save and Close. That's you already deposited the money. Any other questions? The next question was, I have one Quickbooks file. I want to get all my customer and vendor information into another Quickbooks file. As long as it's only lists, it's very easy. Go to File, Utilities, Export, List to IIF files. Which list do you want to export? Select which one you want. You could do all lists together. The file might be too large to import it to the other company. I would do the small list all together and a larger list separate. For example, if you have a huge chart of accounts, do it separate. Customer and vendors, do it separate. And then the others are usually smaller, except for the item list. Let's say you only want the customer list. Check it, click OK. Now it's going to ask you, where do you want to save it? Remember where you save it. You log out from this company, you log in to the other company. You go to File, Utilities, Import, IIF files. Locate the file where you saved the original file from before, and it will be imported in just a few seconds. You can do it with all the lists that you saw before on the export. Transactions is a little difficult. It's different. There are a few ways how to do it. One is to create an IIF format. If anyone needs help on that, please contact me. How do you get all 4 contact lists on one page? Usually you have a separate list of your vendors, a separate list of your customers, your employees, and others. There is a possibility to bring up all 4 lists on one list. The best way to do it is click on Write Checks, point to where it says Pay to the Order of, and hit Control-L for lists. Now you see a list called Name List. It's not specific for any specific type. It starts with a customer, you scroll down, it starts with a vendor, then employees, and then other names. This is very beneficial if you want to look up, you have a name, you don't know which type it is. Is it the other name or a vendor or an employee? You don't have to go through 3 or 4 separate lists. You can sort it by name if you click on name. By default, it's sorted by type. If you click on the word name, now they're all mixed types and sorted by alphabetical order, by name. You click on the left diamond on the top, next to name, this will resort it the way it's supposed to be. Now, this is another useful tool that if you want to resort all 4 lists together to make sure it's in alphabetical order, you click on the name button on the bottom left part, resort list. Are you sure you want to return this list to original order? Yes. Click OK. Now it's resorted to the original order. How do you book personal expenses? That's a tough question. We're not here to learn accounting. I would ask the accountant this question. Depending if it's 100% personal, then I wouldn't categorize it as an expense. I would open on the chart of accounts an equity type of account. You can call it personal, you can call it whatever name you want, as long as you know the name, you understand it, and the accountant will be aware of it. All expenses, all bills, and checks should go into that equity account. If you're not sure if this is a personal expense or not, in most companies on the chart of accounts, part of the suggested list of the chart of accounts, you will see an account called Ask My Accountant. This is another expense type of account. Usually, when an accountant comes in, how often they come, the first place they will look, they will double-click on their account called Ask My Accountant. So if you're not sure how to classify it, you can enter it in there. Also, if you want, you can keep track of it by entering it under other expenses. Question in chat, in payroll, how do you deduct Section 125 deductions like health insurance, etc., that are pre-tax. When you set up a payroll item, click on List, Payroll Item List. Add a new item if it's not in the list already. You can see health insurance in here. Let's double click on this. Click on Next. Here you have the option to choose if it's pre-tax or not. Hope this answers the question. Someone sent me an email today. They have a whole bunch of invoices that's marked to be printed way back from years ago. How can they remove it? I believe we went through that already. Go to Print Forms, Invoices. If you see any invoice in here, try another. You will see a whole list, and it will tell you how many quantity, how many sales receipts or invoices there are to be printed. Click OK. Select a printer that will print to file, or set up one of the PDF writer type of printers. This way it will just create a file, and then you can easily delete it afterwards. If you need further instructions, please let me know. One of the questions was, how do I find my serial number from Quickbooks? Well, if you install Quickbooks, you need three sets of numbers. 2 out of 3 you need while installing the program, and this is called product key and license key. You can find it on the CD, or if you download it, you can find it on email that Intuit sends you. To find it on an existing computer, once it's installed, there are 3 ways how to find it. Either click on Help, on the Help menu, and click on About, the last option. This will bring up a little pop-up that will show you the product key and the license key and how many users. Another option is by hitting the Control 1 on the keyboard. Option number 3 is to press F2 key on the keyboard. On the top left side, it will show you the product and license key. But you also need registration number, which is now called validation key. This one is not written anywhere. You will have to get that from Intuit, the owners of Quickbooks. How to unapply an incorrect invoice payment in Quickbooks. You received the payment. Customer didn't specify exactly where it's supposed to be. You just applied it, assuming auto apply. Usually, and this is recommended, in settings, edit preference, payment, company preference, automatically apply payments. And this should be the case. Now, if you receive a payment and it's applied to an invoice, simply go back to the payment, uncheck it, and apply it accordingly. That's very simple. So you move it from this, let's say it's supposed to be on this invoice, apply it, and apply it accordingly. Even if it's deposited already, to reapply it, as long as you don't change the name or amount, you shouldn't have a problem with it. To cancel out, you click on revert. This will put it back the way it was. How do I change my password in Quickbooks? Once you're logged in, click on Company, point to Users. Sorry, the previous versions, you point to Users and you have one of these options. Second option was change your password. This version, you have it right here. Change your password. Speaking of passwords, anyone here is a system administrator or an accountant. Very important to set closing dates on your file, on your Quickbooks file or your client's Quickbooks file. Once you're done filing the tax return, I've seen a lot of times bookkeepers go back to previous periods, the previous accounting periods, previous years, and changing information. You can find it straight on here by company. You can also find it on the accountant's menu, set closing dates. And you can also find it basically takes you to edit preference. Accounting menu, company preference, and on the bottom here, set date/password. First, you set the date, when the closing date should be, and then this is optional if you want to set a password. Only administrators will be able to override this. But you also want, that's optional, exclude estimate sales orders and purchase orders, since these three are non-posting. Maybe you want to exclude. That's up to you. How do I change the default email message in Quickbooks? Under the Edit menu, go to Preference, where all the settings are. Click on Send Forms. Under My Preference, you will decide which program to use in order to email straight out from QuickBooks. Click on Company Preference, and of course you need to have administrative rights. Select which one you want. All these are able to be emailed. Invoices, estimates, statements, sales orders, sales receipts, and everything else. Each and every one, you can set different messages by default. Remove whatever you want, you can add whatever you want. And this will be the default message. Once you're done, you click OK, and it will be saved for the future. How do I change sales tax rate? Sales tax rate is included in the item list. On the list, question in chat, does that apply to reports also? The answer is yes. Go into Edit, Preference, Send Forms, Company Preference, point to Reports, and then what do you want? What do you want it to be? The report? What do you want the subject to show? And then the top part, and then the body of the message. You can also set all your emails, forms, and reports, what you send out, that you should automatically get a copy of it on their blank carbon copy, PCC. You can enter your email address or someone else, but you want to make sure it's not an outside person of the company. How do you change sales tax rate? Go into item. All the way at the bottom, you will see all your sales tax items. Most companies will have maximum 1 or 2. Let's say this is my sales tax item. Now the sales tax went up or down. Double click on it. Change the rate. Let's say it's supposed to be, instead of 8.125, it's supposed to be 8.325. Click OK, now it's changed. That's very simple. It will not roll back on the previous invoices, only going forward. Next question was, how to deposit credit card payments. Now, it all depends. Don't remember if we went through this already. We definitely covered it in the beginning class. You have a deposit. You receive the payment. You charge your customer's credit card. Let's say $2,000. Assuming this is not a check. It's a credit card. Or we'll do it the right way. Receive payment. A customer paid me $500. Do you want to automatically calculate payment? Yes, and don't show me this message again. Payment method was done by American Express. Doesn't matter if you use an outside company or you use Quickbooks for that. You'll still have to do record deposits. Quickbooks does not know how much money you're actually going to get. Reference number, I guess nothing. Save and close. Now you're going into record deposits. Select the payment. And then click OK. Your customer's card was charged $500. Now, 2 days later, or whatever, you receive the money in the bank. Now, how much money did you receive? American Express would charge you about 3%, let's say. So now you need to take off 3% from the deposit. Now, this is not always the case. Sometimes, a lot of companies, merchant companies, will fund you in full and only deduct their fees at the end of the month. Then you don't have a problem. Of course, we don't have to tell you that you can't include other payments together with the credit card payments, because this is directly wired into your bank account. But sometimes if you have more than one charge, of course it will come in as a batch, as a group. But let's say I only had one. And this company, my company, is not funding me in full. They are deducting the discounts, the percentage, right off the deposit. So in other words, they will not give me $500. They will give me 3% less. Received from, you will enter the company. In this case, it's American Express. You can type in American Express. It's optional. I would enter it. It's another way of being able to report. You type in the name Amex or American Express. You can click on Quick Add. What is it? It's not a vendor. They're not sending you a bill. It's not a customer. It's not an employee. It's other. Click OK. Now the name is saved. That's done. Then you would have an account on your chart of accounts. All depends how you call it. Some companies call it credit card fees. Some companies would call it merchant fees. But definitely you have an account on the chart of accounts. Just a question how you call it. If you don't have it, create one. Whichever account you want to call it. So let's say we're going to call it merchant account fees. I type it in. If I have to type the whole account, that means it's not on the list. So I hit the tab button and I click Setup. What is it? It's an expense. Now for some companies, the accountant will advise they should set it up as a cost of goods sold. Double check with the accountant which one is the correct one. Click Continue. You can add an account number if you want, or just click Save and Close. You want to write down that it's 3%. Check number, it's not a check. If you want, you can enter Amex, American Express. Now, do you want the system to calculate how much it is, or you know for a fact how much it is? So what you could do is start with a minus 500 times 0.03. That's 3%. Enter. This is how much MX is taking off. And you're only going to get $485. But of course, they're also charging you a transaction fee. If it's a corporate account, they will charge you additional. So you will have to basically check the bank how much money you actually got. And that's the only way to know exactly how much they're supposed to, how much they deducted. This is one way of doing it. Or you can simply say, I only got $484. You type in minus 484. Sorry, it's the other way around. You type in 484 minus 500. Basically, my deposit minus how much I'm supposed to get. Hit enter. And this is, it always has to be a deduction. In other words, a minus. Once you're done, you click Save and Close. This is the way how to enter a credit card deposit when the company is deducting the discount fee right off the deposit. Sometimes you might have another issue. Person pays you in cash. There's an invoice of $750.14. You go to the bank and you enter and you deposit $750. You leave the 14 cents in your petty cash drawer. Now you might have an issue. You have to enter receive payment. You have to enter $750.14. Otherwise, the customer will still have a balance. You want to write her off to discount? Well, that's not true. What you would do is you enter this receive payment the regular way, $750.14. You get to this screen, record deposit. You select the deposit, assuming here it says $750.14. Cash back goes to your petty cash account. If you want, you can enter a memo. Type in the 14 cents here. This way, your deposit is only going to be $750. Any questions on that? How to book a vendor upfront deposit in Quickbooks. As far as I remember, we went through that already. You write out a check to accounts payable. Now the person tells me, well, his accountant said no way. His accountant is right in a certain way, especially if it's for a longer time. A lot of people today's time, they deal with overseas. They send deposits up front. It could take several months until the merchandise arrives. The accountant does not want to see a negative balance on the accounts payable aging. There's another way how to do it. On the chart of accounts, you create an account called vendor deposits or deposits to vendor. As long as the account type is an other current asset. Very similar to prepaid insurance. So you write out a check. Let's say we have a new account. Other current assets. Continue. Deposit to vendor. Save and close. Now I go to my right check. I wrote out a check. Let's say it's a wire transfer. So I'm going to type the word wire. Today's date to one of my vendors. Let's say this vendor. The amount is $1,000. What's the account? Deposits to vendor. You can write down a memo that says 50% deposit. Save and close. Now you have a balance in this account, an assets account, $1,000. That means someone outside the company owes you this amount. The bill arrives a few months later. You enter assuming you have the purchase order and everything else. So let's say we go straight to the bill. Today the reference number and everything else. And then this is $2,000. This is, let's say, cost of goods sold. I bought merchandise, or we use an item. Well, actually, the bill is $1,000. Why? The cost of goods sold is $2,000, or the item is worth $2,000. The next line, you're going to enter a negative $1,000, and the account is going to be deposited to vendors. And then save and close. Now, the chart of accounts, deposit to vendor account is 0. Because you already took the deposit. You can double click on it. You'll see when it went in and when it came out. Now you're going into your vendor center. You only have a bill for this vendor for $1,000. This is how most accountants want it to get done. But if it's a short term, you could definitely use the accounts payable as a credit. Locate and move current QuickBooks file. Didn't quite understand this question. Sometimes you can have the QuickBooks file on a local machine. You want to move it to a different machine. In order to locate this file, the current file, if you have the QuickBooks open, it's very easy. Click on File, point to Open Previous Company. And here you will see the first line you see is the current open company. And you know what it, just follow the path. You can't copy this line. The best you can do is a print screen. Or just write it down. And it's basically the folder where the file is sitting, and after the last slash is the actual file, followed by .qbw. If you want to move the file, you have to locate the file and just copy or cut and paste it onto whatever you want to send it to. But I would rather, if you want to move a file, I would rather make a copy and restore it to the new place. It's cleaner, it's easier, less mistakes. You have partnership. Partners of a company question in chat, even if it's previous version. It also allows you to open the file. Well, here's the thing. If you want to open on a new computer, a file that was used in previous version, you will have to update the file first. Speaking of updates, the version every year is a new version. QuickBooks releases what's called release. They send out notices. Please update your file. You're not updating your version. You're just updating the existing version. Be very careful for those who have 2011, just got note that there is some problems, some issues. Shouldn't say problems. There's some issues. And some pro advisors say there's more than issues with the latest release called Release 8 in 2011. My advice to you, don't update. If you get this message, update now or update later. Install now, install later. Say install later until the release 9 comes out. It's expected to come out any day. So if you're trying to move a file from a previous version into a new version, you will have to back up the file and update the file. One very important note. I had a client who updates his original file into a trial version from Pro to Enterprise. You can only go up, not back down. After a month, the file was locked out because the trial version expired. In order to buy an Enterprise, you have to pay $3,000. So I will advise you, don't update your file if you don't have the registration number. What do these updates do? Periodically, QuickBooks tries to fix bugs, issues, or new releases that they find either important or beneficial for QuickBooks users. Every update is different. This new update they tried to push out for a critical update, and it happened to be, it just did the opposite. To track partnership business expenses. You can have partners, they have cell phones, they have cars. It's standard business expenses. But each partner wants to know exactly what the other partner already used the company for their own, to cover their own expenses. The best way to keep track of this is to use the class option. But of course, only if you're not using the class for something else. You could use class for multiple different scenarios, but it's not recommended because it will confuse you at the end. If you're not using class for anything else, set up class first by clicking on Edit, Preference, Accounting, Company Preference, Use Class Tracking. Now, if you're required to enter a class on every transaction, click on Prompt to assign classes. This way, every transaction you will have, let's say you have a bill. You get a bill from your car lease. You enter the information here, and then the account is going to be automobile expense. You can have a sub-account called lease, car lease, whichever you want. As long as the class has the owner's name. You will have two classes, either by initial or a name, and each transaction that affects one of the partners, you will use the class. You can always run either a profit and loss or just a transaction list by class to see who used what. There is a built-in report called Profit and Loss by Class. And it will tell you exactly by class, assuming these classes are partners, it will tell you exactly what was used for this particular class. Every transaction that you have the option. All the way on the right of the transaction. On the left side, you select the account. Then the amount. You have the memo, customer, billable. And then all the way to the right, you have the option to enter a class. Hope you can see the screen. The same thing you have when it comes to enter a check. You also have on the right side the option of class. And the same you have enter credit card charges if you use a credit card. And this you could use if the owner, one of the partners, use the company credit card to purchase gas. Another question was, what's the difference between assembly and group items? Let's go into the list, the item list. We have what's called inventory assembly item, and we also have a group type of item. What's the difference between the two of them? There are several differences. One of the differences is You can have group is based on the same idea, what it's put together of. On group, you can decide a sales price. It basically goes based on the items of the components that is grouped together. An inventory assembly, you can decide a sales price. Inventory assembly will not show the components on the invoice when you sell this item. It will only show the item of the assembly. Group, you have the option. You can choose if you do want to see the list or you don't. By default, it's not checked, so it will not show. If you do want it to show, make sure to check off the print items in group. Otherwise, it will not show. This is mainly the difference between group and assembly. I had a call the other day. How do I fix my open balance? I enter a vendor. This vendor had already an open balance. And I forgot to enter it while set up, new vendor. Let's say this vendor here should have a balance. Now you're unable to enter an open balance here. There are a few ways how to fix it. If you're familiar with journal entries, I would advise you to do it through a journal entry. Let me show you how to you click on a journal entry on the company menu, make general journal entries, assign journal numbers do not display, the date, the account is opening balance equity. It's an equity account. How much money? Is it $1,000? Make sure it's on the debit side. And then here is accounts payable. Same $1,000. But then if you use accounts payable, you have to enter a name of the vendor. This is one way how to do it. Difficult part of this is you need to know credits and debits. Exactly when to do a debit or when to do a credit. So let's say you select this name. Oops, not a customer. It's supposed to be a vendor. Scroll down to vendor. Save and close. Now this vendor has a balance of $1,000. You can change it if you want to see. That's not the one. If you click on open balance, you will see the journal entry. Now if you double click on it, let's bring this back up. This is only if you do accounts payable on the credit side and open balance equity on the debit side. If you switch it, it will just do the opposite. So this is the downside of using journal entries. You need to know credits and debits. So I advise a person to do it a different way. Let me delete this first. Open up a new vendor. Call it, let's say, ABC. Can be exactly the same as the other one. Enter an open balance of $1,000. That's it. Click OK. Now you have a balance a vendor with the balance right next to it. Double click on this vendor. copy it, close it, go back to this vendor, paste it. Click OK. Name already being used. Would you like to merge them? Yes. Now you have only one vendor with the balance of $1,000. Any questions so far? The same you could do with chart of accounts, with customers, with anything else, and you don't need to know credits and debits. All you need to know is to set up on the right contact base. Question in chat, how do you put a credit limit for a customer? Go into the customer center, bring up the customer by double-clicking on it, additional info, payment info, credit limit, enter it here. But once again, the credit limit will only flag you that the customer is going over the limit, but it will not stop you from anything. Sometimes, it's another question. Sometimes you have a bill, let's say an electric bill. You have an electric company. It was paid not with anything involved in the company. It's paid through an outside person. For example, someone laid out the money for it. Now the question is, that person that laid out the money for the electric company, what's his status? What's his role in the company? Is it just an outside person? Then it's considered a liability. If it's a partner in the company, or it's the owner, took out money from his pocket, then it's an equity. If the payment was a gift, an outside person said, don't worry about it, I'll pay the bill this month, then it's still considered an equity. Liability is only if you have to pay for it, if you have to pay back for it. So let's say, for example, it all depends what the role is, and according to that, you will have an account. If it's a partnership, some companies would want to treat the owner, any investment from the owner, also as a liability. This way they know for fact, when it comes to liquidation, they need to get their money back, and then we can split on a profit. So you open a new account, depending if someone involved in the company, like a partnership, then it's an equity. Otherwise, it's a loan. So let's say it's an outside person. Create a loan account and click continue. I would enter the name of the person, whoever laid out the money. This is only assuming this person wants his money back. Enter an account name. Save and close. Now, double click on this account. When was the date they paid? Hit tab, pay. Let's see a vendor. We have a balance. Let's say it's this vendor here. City of Millfield. I go back to my account. Pay, start typing. City of, or you can select it from the list. You will enter the amount under this column called increase. How much money was it? $1,000. Account, accounts payable. You can enter a memo here, whatever you want. Hit record. Go back to the vendor. This balance is paid up. You go to the chart of accounts. Now you have a balance to this person for $1,000. This is only assuming that this person is not anything to do with the company. Then it's a liability. Or even if it's a partnership, if the owner wants it back, he wants you to treat it as a liability. Hope this answers the question. But you still need to click on Pay Bills, and the reason being is because it's paid but not applied. So click on Pay Bills, locate the bill from this vendor, place a check mark on the left side, click OK. Now, the credit, which is in other words the payment from the outside person, is going to be applied to the invoice, to the bill. You're done, click Pay Selected Bills. Now it's telling you nothing was generated, there's no bill. You click Done, you're basically done. Now when you go into Open Balance, nothing shows up because the credit is applied. Now when the time comes, you want to pay back this person. Click on Write Check. You want to write a check or you want to print it. Payable to, I guess his name, you can enter it. Quick Add as other. They're not a vendor. This outside loan payable person is not a vendor. Click OK. $1,000. Or if you want partial pay, whichever the balance is, the account is the name of the person. In other words, the account you created. Save and close. Go back to the chart of accounts. This account is now down to zero. If this is equity money, meaning it's from the owner, and this company is a private company, then you would have an account, an equity account, called capital stock, or whichever name it is. You will do the exact same thing we just did with the liability account, you will do on the capital stock account. Basically, double-click on it, enter the payee, which is the vendor, enter the amount on increase, account payable, memo you can write whatever you want, and then save it. As we discussed in the first session, there are 3 ways to work around in Quickbooks. This is more There are 3 ways to work around. One is using menus all the way on the top. One is using the icons. And another one is using the home screen. A lot of times you have a set of steps that you use. And you want to be able to group them together all in one. For this, you could use what's called favorites. One of the menus, more towards the left side, the 5th option, after File, Edit, View, List, is something called Favorites. Click on Customize Favorites and choose which one you want this favorite menu to have. You got every possible option that's available in QuickBooks under any menu, you can have on here. And you can pick and choose which one you want and the way you want it sorted. Once you're done, you click OK. Company snapshot is one tool probably very few people know about it. I know a lot of people just remove it because by accident, if they want to click on the customer center, they click on the company snapshot, and it takes quite a few seconds to load. This is giving you a brief snapshot of the company. Basically an account balance on the bottom left side, your income and expense in a graph. Then you have comparison. You can do yearly, you can do monthly. This will give you all the months together, compared last year with this year. Customers who owe you money, and you could sort it by customer, by due date, by amount due. And then you have at the bottom, you have your expenses. This is just the opposite of the income here. And then you can have your total sales by customer. See which customers. So you basically have everything on one shot. You scroll down and you see your expense breakdown in a graph. The next tab, you'll see all your payments. And then you will see your customer information here. Basically, pick and choose which customer you want to see as a snapshot. You have their information here, the recent invoices, the recent payments, sales history, and the best-selling items for this customer. And you can pick and choose which customer you want to see. Every customer you choose, the information will, of course, change. Let's close this down. Yesterday we started explaining how to deal with payroll if you outsource it. Most companies, if they outsource payroll, they should have somehow an understanding of how to enter the information in Quickbooks. I got quite a few requests during the day and last night that we should give an exact example how to enter it. I'm going to try to set up an example to see how it works. The best way to do it is you get one of these reports. Let's set an example that we have $2,000 gross payroll. We have 4 people. Every person, $500 gross, $450 net. So $50 is taxes, for example. Now you're going to have a payroll account, let's say. Going to have 4 checks. Now, in order to do this, I would write out the checks, the net check. I would open an account called Payroll Clearing. And you will see in a minute why it should be like that. They open a new account called Payroll Clearing. It's not on the list. I click on Setup, and this is a other current liability account. This is where all the checks are going into. We'll change this amount, same employee. We have another employee. And let's say one more. So now all the net checks are written out correctly. Let's say, for example, the payroll liabilities and the payroll taxes are all $50 each. The difference between payroll liabilities is the taxes deducted from the employees, and then the payroll taxes that the company has to contribute to either match funds or the other taxes. Now I have question in chat, why was the first payroll expense and not payroll clearance? Probably missed it by accident. Yes. It should be clearing as well. You're right. Now we're going to enter a journal entry. We start with how much money is going to come out from my bank. My payroll account, not including the checks, just for the taxes. It's going to be $50 each, times 2, one for the employees and one for the company. We have 4 people, so it's going to be $800. Payroll expense. This is an expense. It's $2,000, which is the gross. This I would call payroll taxes coming out of the bank. Now, how much money did come out to be just the payroll net? This one will be payroll clearing. Came in 400. Oh, this is $400. $50 a person times 4. It's $400 for taxes. And then the $200 is payroll tax expense. So it's the payroll taxes right here. Payroll clearance is net payroll. And then this is ER, stands for employer payroll taxes. Basically what we're doing is, first of all, you would have to write out a check of all the net payrolls, the one we just did. You will write it out either from your regular bank account, or if you have a payroll account, you will write it out from your payroll account. Use regular checks, okay, with the numbers payable to the name of the employee, the date, and the net amount. Which account? A liability account called payroll clearance. Once you're done with all the checks, then you will enter what's called a journal entry. You're supposed to deduct, supposed to pay from your payroll account or from your regular checking account additional $400 for payroll. According to our example, we have an expense of $2,000, which is gross pay, and additional employer's taxes of $200. So if you're paying $450 for 4 people, that's only $1,800. You're still supposed to pay $400 in addition, which is $200 for the employee's taxes and $200 for the employer's taxes. So you're basically going to credit, meaning it's coming out, $400 from your payroll account, which is your checking account. And then payroll clearing is giving back $1,800 because this is just a clearing in and out. Payroll expense is now getting $2,000 because this is the gross expense, and this is marked as a debit. And then payroll expense taxes, and this is for the employer's taxes, for the company taxes, for $200. This is all assuming the gross payroll is $2,000 and the taxes is $200 per each. If it's different, then you would obviously have to just change the numbers. Some companies will require to have a breakdown of this $2,000 by department and a breakdown of these $200 by the type of the taxes. But it all comes down to the numbers. The bottom line is these two totals have to match exactly. If it's 1 penny off, it won't let you save it. Any questions so far? Now you will see, of course, yesterday we started with $2,000, but now our payroll expense went up. It's not only $2,000, it's $2,200. So your transfer from your regular account, if you have a separate payroll account, which most companies do, you will have to make sure you transfer $2,200. So either you go back to your checking account and make sure you transfer it out to your payroll account, $2,200. Now your payroll account should be clear. But more important, payroll account, if you have a few dollars, it's not the end of the world. It's your checking account. More important is you have to make sure your payroll clearing account is zero. Just a clearing account, you can double click on it, you'll see exactly what is happening. The net check coming in here, and it goes back out on the payroll journal entry. Any questions so far? I had a request the other day to show how to do online banking. I will just try to explain it, how it works, and hopefully you'll be able to follow the simple steps. Number one, there is 2 ways how to see transactions coming in from the bank. And this you will see under Edit, Preference, Checking, Company Preference. Online banking, do you want to see side by side? Or do you want to see as a register mode? This is a sample company. I don't think it's going to be possible to show an example since it's not possible to bring in the information here. We can see how just the window, how the window looks like. Under banking, online banking center. First is asking you how do you want it, and the same is under Edit Preference. You want it to be side by side. Right now you're using side by side. If you want, you can click on Change Mode, and then you can decide you want to see your register on top and the newly added transactions on the bottom. Let's see first how this looks like side by side. You click Continue. Now this is basically how the register looks like, how the online transaction import looks like. Most banks, if you try to retrieve information, transactions from the bank, will not charge you. Some banks will. So if you try to use receive transactions, of course the first time you will have to set it up. You will have to enter a username. You will have to enter a password. This is called pulling information from QuickBooks should pull the information from your financial institution, which is a bank. Another way is you log on to your bank and you say the bank should bring the information into QuickBooks. That one for sure is free. Some banks don't, especially if the account is considered a personal account, a private account, instead of a business account, they won't support the option to import to QuickBooks, only to Quicken, which is the sister company for QuickBooks, developed by the same owners, called Intuit. So let's say you click on receive transactions. After a couple of steps, it will look like this on the bottom. It will say that this checking account was updated based on QuickBooks balance and based on the online balance. And on the top here, it will say when it was last updated. When you see a number here, numbers to review, you can click on it. That means you have new transactions. Click on it, and now you will see side by side how to enter new transactions. On the top, it will tell you 7 came in, but 2 out of 7, QuickBooks was able to match with the register. That means these 2 transactions were already entered. These 5 were not matched. So now it's unmatched. One thing we have to remind you, if you already reconciled last month, even if you entered it, it will still be considered unmatched, because QuickBooks tries only to match unreconciled transactions. So if it's reconciled, it will not match it. Then you wouldn't want to re-enter all these information again, because then it will double up your transactions. The best way to get rid of it is select items to delete. Anything prior to a certain date, let's say you already reconciled November, you don't want any information prior to November to be imported. You can either pick and choose this one I want to delete this one, or select all transactions prior to a certain date. Now it will be all selected. You click select, delete selected, and it's gone. There's no way to bring it back. But this is, of course, only if the bank reconciliation is already done for this time frame. If you click on Add Multiple, this window will show up. On the bottom, it will show you all the matched transactions. On the top, it will show you all the unmatched. Some of them will have downloaded name, and this is only, of course, if it doesn't have a check number. If it has a check number, there's no name to be downloaded. All the bookkeeper has to do is add these 3 columns. Everything else comes in automatically. Payee is optional, class is optional, account is important. You can't add an account. You can't add a transaction unless you filled in an account. Now, the other day, someone asked me, what account should I enter? Well, where is this check? If you don't know what this check is, try to log on to your bank, online banking, and try to see if you can locate a picture of the check. And then you enter it accordingly. Once you've selected, you filled everything out, click on Add Selected, and now it's off this window. This is basically how you do online banking. If you don't want it to finish now, you click on the bottom right side, Finish Later. Are you sure you want to leave it? Yes. Now it only added those 2 matched. Now you stayed with 5 unmatched. Sometimes you have more than one financial institution, meaning you have more than one bank. If you have, let's say, 5 accounts in Chase, they will all come in together. It goes on the top left side, it goes by bank. So sometimes you can have bank accounts, and then separately credit cards from a different bank. You will have to do each separate. Any questions so far? Now this is assuming you want to have this side by side. Side by side have one big advantage, that you could delete anything you want. There's another way how to see this online banking. Let's go back to it. Now we're going to select Change Mode. It should be Register Mode. Register Mode has one big advantage, that you could use what's called alien. It's asking me to close all the windows. If you want to use alias, make sure it's set to on. Go back to Online Banking Center. This is if you want to use the old-fashioned way. Prior to 2008, this was the way how QuickBooks works in terms of downloading transactions. Choose the bank. Let's say it's this bank. You have two accounts from them. One is a checking, one is a savings. Assuming your bank doesn't charge you to pull the information. Click on Send and Receive. Now, Send and Receive will be whatever you checked off. Send and Receive meaning QuickBooks will go on to your online bank and try to retrieve the information. This is not applicable if you're trying to go on to, if you're logging on to your bank account and downloading the information into QuickBooks. Then you will get this window once you're done downloading the information from your bank account into QuickBooks. You will not use Send and Receive. But let's say assuming you will use Send and Receive. This is all after it's set up the first time. If you only want to download checking information, not the savings, remove the check mark. But let's say you want both, Send and Receive. Once it's done, it will show up on the bottom what he was able to download, what the balance is, as of when. You double click on this line or click on it and click View on the right side. This is the information that has not been downloaded yet, meaning it's downloaded, has not been entered in the register. This is register mode. You see the register on top and the newly downloaded information on the bottom. Either add one to register, each and every one. You highlight it, you click on it, add one to register. Or add multiple if QuickBooks is able to recognize one of these transactions. There's another option sometimes, for whatever reason, it doesn't show, either because, like, let's say this one. You entered it, but the computer didn't catch it. You can locate the actual transaction. Click on it. Let's say assuming this is a deposit, but it has to be the exact same amount. Otherwise, QuickBooks won't let you force a match. And then you click Match. And once again, only if the amount. This has to be a deposit, of course, and the amount is exactly down to the penny. If you have a transaction, $9, well, obviously this is a deposit and this is a check. And then otherwise you could add multiple. It will look like this. All you need to do is just add an account. Class if you use. Anything that's white you can add. Anything that's gray you can't touch. Once you're done, you click record and it's all recorded. But of course you can't record without adding an account. One big disadvantage, you can't get rid of it. You can't delete one of these. For the example we said before, if the information downloaded is prior to last reconciliation. There's also what's called alias. I have this pay, it's called bank service charge. If I click add one to register, first of all it's asking me, do you want to create a check? Do you want to use pay bills? Or just add it using the register? You click on set my preference to always use the same, and then you click OK. Now here it will add the bank service charge onto the memo. But you can set up that it should be under the payee. I don't want it to enter it down. Then the same with everything else. And this is called alias. If the message, something like this comes up, you have the option to select. You want, let's say for example, you use gas, ExxonMobil. You have one name under the other name called ExxonMobil. Every gas station will have a different name. It will mention ExxonMobil followed by the number of the franchise. So you don't want to add each and every ExxonMobil into your other name contact. Because otherwise the contact name will be huge. What you do want to do is add it as an alias. Now you need a live example in order to show you that. You can always, once this name comes in, you have four options. Create alias, quick add, setup, or cancel. If you don't want to add the name to payee at all, you can say cancel, and then it will bypass the name. The name will only be added on the memo. Click on done. It's asking you, are you sure you want to finish this? Say yes. Any transaction that was added using the online download let's see if it's added here. Any transaction wasn't added to this bank. Any transaction added using the online download will have a symbol like this. This indicates it was downloaded. Now when you go into reconcile, assuming you're downloading everything, you're not missing out anything. Let's say I click continue, you can use the match, and then it will mark all that was downloaded. This way, it will take you half the time to reconcile. You'll only have to set the ones that, for whatever reason, didn't download. Now, I've seen a lot of problems using the download. Sometimes the computer assumes that it's all one transaction and it won't re-enter it again. Because the computer most of the time looks at the amount, not at the actual, unless there's a check number, of course. Question in chat, can you use the alias in side-by-side mode? The answer is no. So that's why if you go into edit, preference, you won't have this option. If you use side-by-side, the whole alias option disappears. It's only if you select register mode. So both sides, both options have pros and cons. Any questions so far? When you use the full payroll module from Quickbooks, you have the option. A lot of reports are not available pre-installed in Quickbooks. But what Quickbooks provides is another set of reports, and it's very helpful and very nice and neat. You can export payroll information into Excel, and it works very nice. You can print it, and it has all the calculations and totals. When you click on the report, employee and payroll, the top two payroll options, report options. Summarize payroll data in Excel. This will export the whole payroll for the entire period of time. Or you could pick and choose which one you want to export. One of the options here is you can track if you build your time and cost from your employees to your customers. And this you can export into Excel. It becomes an add-on if the Excel is still open. And you change anything in Quickbooks, there is a macro, a button in Excel that you can update the information. And all what Excel does, it's retrieving the information from Quickbooks, like refreshing, and it updates. This way you don't have to rerun the reports out to Excel. Can't really show you an example because it's not activated to see Excel. Enterprise solution, not quite sure if this is only this version or prior versions. I know 2010 has it as well. Not sure about the previous ones. You can open, when you click on File, you can open a second company. But it's limited. This is only if you have enterprise solution. Sometimes the accountant is asking you, send me an accountant's copy. What's the difference between a regular copy and an accountant's copy? Accountant's copy have the option. The accountant could work on past history, on prior years, let's say, and then they send it back to you. They can do almost any adjustments, any corrections, changes to the accountant's copy, and then they send it back to you with all the changes. All you need to do is just import it. Unlike when you want to do a regular copy, then it will be considered as a backup. If the accountant works on it, sends it back to you after a couple of weeks, if you overwrite your existing copy, you will lose all your information that you entered during the time from when you gave it to the accountant until he brought it back to you. I've seen some clients do that, not realizing what's going to happen. In order to create an accountant's copy, if you want to send to accountants, open and under File, Accountant's Copy, click on Open and Convert Transfer File. When it brings it back to you, you will come to the same place. Convert Accountant's Copy to Company File. This way you will only get the changes that the accountant made. Enterprise has another feature. If you have multiple companies, more than one Quickbooks file for several companies, you can combine and process multiple reports. If you click on this option, first of all, it's going to ask you this one is different. This one is just multiple reports from all the reports. That is, the same idea is when you group memorized reports. So this way, you don't have to group it, you don't have to memorize it. You can run it from process multiple reports. If you want only accountants, only this, the same idea you can get when you click on memorize reports. You go into memorize reports list and you double click or click on it and you click display. Same idea. This is what I wanted to mention. Combine reports from multiple companies. First of all, you'll have to tell them which company do you want to add. It's going to be combined or here. Each line is separate, each company is separate line. And then you set the date range. What type of reports? It has to be unique. You can't combine custom written reports. You want it on accrual basis or cash basis? What's going to be the top? Which companies are going to show? And you can overwrite it. And then once you select it, which files to use, click Combine Reports in Excel. It will be combined in Excel as separate tabs, separate sheets. I would go through how budget and forecast look like. In order to do, before that, you want to see every vendor and every customer, you can have notes attached. You can have a global to-do list that affects the entire company. Everyone else can see it. And this is like a reminder. You can set that this should show up on your reminder list. To add a new note, you click on To Do. You click on New. Remind me on whatever date you want. If it's done, you click Done. Now it will not show up on the reminder list, only what's not done. Those that have a check mark will not show up on the reminder list. To edit, just double click on it. To delete it, either right click, Control D, or delete to do note. To have reminders, some bookkeepers would want this pop-up reminder to show up every time they open a Quickbooks file. You can set what to show up on the reminder and how it should show up. For example, if you double click on to-do notes, right now it's showing you a list. It's showing you just summary. If you double click, you'll see detail. Anything that's due up to today, but it's not done yet. To set the list, what should be reminded and what's not. Go to Edit Preference, Reminders. First of all, this is my preference. Show reminders list when opening a company file, yes or no. You can always get it from the home page as well, so you don't need this to be reminded. But sometimes it's a good idea if you do want it to see. Then this is controlled by the system administrator. Do you want to see just a summary? The way it was set up. This is all summary. You don't see details. If you want to show the detailed list and pick and choose which one you want, let's say the to-do notes, I always want to see the details, the list. Or don't remind me, don't show up on this list, on this screen at all. Now, certain reminders have dates when you want it to show. Checks to print, certain amount of days before the check date, or a certain amount of days before the paycheck. Overdue invoices. When an invoice becomes due, you could see a list of overdue invoices. Do you want to see a total, just a summary, a line with an amount on the right side? Or you could set, you want to see the full list. And it will be added every day that goes by. The list will grow with the new invoices. It will disappear once the invoice is paid. Or, of course, if you extend the terms or you change the due date. By default, it goes from the due date. This is where you control your reminders. You can also find the reminders on the top right side of the home screen. On the bottom right side of the home screen, all the way on the bottom. You click on Reminders and Alerts, View Reminders, and you get this screen. Now we set that we want to see a list, so always when you open the reminders, it will show a list. This is a brand new feature, Alerts Manager, and it will tell you based on the tax forms what needs to be paid and what's already done. This is just reminding you when to do it based on the required dates. Planning and budgeting. You can set up a forecast. You can also set up a budget. And then we'll see a report how it works. Let's say we're going to set up a budget. What is it? Fiscal year of the next coming year. It's called profit and loss by account. You have all your income, cost of goods sold, all your income, cost of goods sold, and expense accounts. You can decide which one, and if you need to adjust any of these accounts, the amount, you can override it. Let's say you want to increase, so this should be, for the new year, it's going to be $9,000. You type in 9,000, and you could click on the bottom left side, copy across, and the whole line for the 12 months will be 9,000. So you don't have to retype them every line. You can save it once you're done, you click OK. Or if you want, you can create your own budget from scratch. Now you can see the report, budget and forecast. First of all, your budget overview, the one that you saw before. You want to see the account by month, doesn't give you too many options. Question in chat. If you're working on government contracts where the funding has different fiscal years than your own fiscal year, how can you set up budget to reflect that? Sorry, but I don't know. Here you can set up, here you can change basically the date if you want to run your budget and forecast on a different level. On creating the budget, I didn't see any option to let you create. But when you try to create a forecast, it lets you create just a year, not starting when you want. Here you can see exact overview that you saw from the previous screen. You see it on here, the columns is by month. You could say I want to see the column by quarter, by year, if you're running more than 1 year. Then the next report, you could see the budget versus actual. Same report. And now you can see the budget, but the actual was X amount. And you can see the over or under, based on dollar amount and based on percentage. So you got, for every month, you have 4 different columns. Then it starts, when it says the month, that means it's actual. And you can see if you're over or under. On estimates, if you run your job estimates on the jobs, time, and mileage, job estimate versus actual summary, you can see anything that was billed out. Estimated revenue versus actual revenue, if it was billed out or it was not billed yet. And this is a report you could see. You gave an estimate for a customer. Now what happened to it? And this is part of what you could use this report for. Now, if anyone has any questions you want me to cover for the next minute or two, please feel free to send in by chat. I hope everyone enjoyed the class. You can check out OU job boards, OU.org for jobs available. They set it up, they change it, they update it very often. You can send in some feedback to jobs@OU.org. If there's any improvement you want me to improve in the next classes. My email address is mayer, M-A-Y-E-R, at F as in Frank, M as in Mayor, D as in drummer, business.com, and I also included on the chat. Thanks very much, and good luck for everyone.